Hi, everybody. Welcome back to Ox Talks. It's Thursday, April 25th, 2024. Thank you for being here, for watching these videos. I appreciate you very much supporting the channel. If you're not subscribed, please do so. Let's continue to build this community, wake people up, share these videos with as many people as you know, family, friends, coworkers, colleagues, so we can do our part. Interesting story, yesterday's video that I discussed the protests that were going on the college campuses across this country and some of the illegal immigrants fighting and brawling in New York City. I gave the video a title. I never changed the title, but YouTube would not let me monetize that video yesterday. I never encountered this before, but it kept telling me when I was going to monetize the video, I didn't have a title. And I would erase the title and type it back in. I did not try to put in different words or to conceal what I was trying to convey because I wanted to share it for what it was worth, and that's what I was discussing, the protests. And look, it's not about the monetization at all. I don't make these videos for the money, obviously. But I want you to be aware of that because there's obviously some censorship. Censorship is alive and well. I don't know what the key words in that title were that YouTube didn't want to have as a headliner, but they were in there. Let's talk about today's news. It's economic in nature, and the primary news released today that sent the markets, declining substantially. Well, obviously, we had a pretty big rise in the 10-year, which is putting pressure on markets. The debt markets are going to. I was just watching Greg Manarino, and he was saying, "Look, that's where it all begins and ends. Is what happens in the debt market." So watch that 10-year. If it continues to spike, that's probably going to continue putting a lot of pressure on these markets. I saw that gold and silver ended up having a nice day today. Close, I think gold was up $18, $20 an ounce. But anyway, the story I want to share with you today, and I'll give you the numbers. It was today's GDP release. I'll go into the specific data in terms of the numbers just for a few minutes out of a Zero Hedge article. And then just a few minutes ago, I saw an article out of the Business Insider that I think summarized why it's important and why it has probably led to the sell-off in the markets today. So let me start with Zero Hedge article. It says, Stagflation shock. GDP stuns with lowest print in 2 years, below lowest estimates as PCE comes in red hot. So the numbers were as follows. Bureau of Economic Analysts reported that Q1 U.S. GDP unexpectedly once again collapsed to just 1.6%, down more than 50% from the fourth quarter of last year's print, which was 3.4%. The lowest print since the second quarter of 2022. And a huge miss to the 2.5% estimate. So the estimates were coming in from the economists, the experts. They were calling for 2.5% increase. We only got 1.6%. It says the GDP printed below the lowest estimate, which was SMBC Nikko, which was at 1.7%. So it came in below the lowest estimate. It dropped more than half from the fourth quarter of last year. And it says it continues, it says the prices of goods and services purchased by U.S. residents increased 3.1% in Q1 after increasing 1.9% the end of last year. Excluding food and energy, prices increased 3.2% after increasing only 2.1%. So look, prices are increasing. GDP is going down, but the prices are going up. And it's that divergence that we really need to be careful about. It says personal consumption expenditure prices increased 3.4% in the first quarter after increasing 1.8% in the fourth quarter. And it says, here's the punchline. Excluding food and energy, the all-important core PCE price index increased 3.7% after increasing only 2% end of quarter, fourth quarter last year. and coming in hotter than the 3.4% estimate. This is, in fact, it came in above the highest estimate. So those are the raw figures and the data. Let me obviously take this with a grain of salt. It's government released numbers. But the article I want to share with you, I just saw, it was from the Business Insider. And it's entitled, "The U.S. Economy may be barreling towards stagflation, an outcome worse than recession." And this article says, this was a worst of both worlds report, referring to the GDP report. Slower than expected growth, higher than expected inflation, wrote David Donna Bedian, Chief Investment Officer at CIBC Private Wealth US. First quarter growth fell well behind estimates, rising at an annualized rate of 1.6%. We just told you that, according to the BEA. Not only is that far under forecast of 2.5, but it failed to live up to the 3.4% increase achieved in the fourth quarter. While such a cool down would usually bolster calls for interest rates to start easing, the report noted a hotter than expected rise in consumer prices. That puts serious limits, it says, on the Federal Reserve's ability to take action, meaning to cut rates. And look, there's no doubt the reason why the stock markets have been rallying as of late and putting on gains is on the hope, again, that the Fed is going to start cutting rates. It says the Fed needs inflation to climb lower before any rate cuts can happen. Stocks, which have long priced in those cuts, says sold off sharply today. It's also bad news for the economy, as sputtering growth and higher prices are the key ingredients for stagflation, which is characterized by economists as stubbornly elevated inflation over a prolonged period of time. Such a scenario can be even harder to combat than a recession because of the dynamic outlined above. The Fed's hands, it says, are largely tied, meaning if the Fed starts to cut rates when prices are going up, you're going to have runaway inflation, right? And so that's where this catch-22 for the Fed, given these numbers today. This is America's last dalliance with stagflation came in the 1970s. Says the precedent can offer a glimpse into how the U.S. economic picture could unfold, and makes it clear why economists are desperate to avoid a rerun of what happened in the 1970s. Early that decade, it says, geopolitical disagreement prompted the OPEC coalition to restrict crude export to the United States. The energy prices rocketed in response. With additional help from high government spending and the dollar decoupling from gold, inflation surged into double digits while the economy tumbled. I remember being young in the 1970s, and I was born in 1970. I remember where the gasoline was rationed, and if you had I believe the way they had it set up is if you had a license plate ending with an even number, you got your gasoline on like Monday, Wednesday, Friday, or something like that. If you had an odd ending plate number, you would get your gasoline on Tuesday, Thursday, Saturday. I don't know if that was exactly the way it was laid out, but I remember as a kid waiting in these long lines with my parents so they could fill up their tanks on whatever day it was where they could get gasoline. That was it was crazy. But again, you had energy prices skyrocketing while the economy was faltering. It says, in order to finally rein things in the 70s, the then Fed chairman, Paul Volcker, was forced to raise interest rates, listen to this, a staggering 20% to calm the price highs, which threw the United States at that point into a deep recession. This is JP Morgan's Jamie Dimon is among those who have recently made allusions to the stagflationary 1970s, warning that markets have become too cheerful about the state of the economy. And it says, so tomorrow there's another report coming out, which is the Personal Consumption Expenditures Report, okay, PCE. And that will give the markets believe that'll give a more clear reading as to the real state of inflation. So that's viewed as the Fed's main inflation bellwether. Will offer investors a clearer picture of where inflation is headed. If it goes higher, the Fed will have little choice but to start to continue to tighten policy or to restart tightening of policy, meaning raising rates. We are not far from all rate cuts being backed out of the investor expectations, this article concludes by saying. I mean, if that does happen and the investor expectations start to shift to no rate cuts this year, maybe not even into next year, I think there could be a substantial sell-off in these markets. And let's watch that 10-year yield again. The higher that goes, I think today it was 4.7 something percent. Don't know where it ended up, but that is what we have to keep an eye on. The last discussion I want to have today, or point I want to address, is about the birth rates in the United States. It has absolutely nothing to do with GDP and with stagflation and the economy, but I wanted to share with you something that came out today on The Hedge. And again, it's where are we heading? Where is society going as a whole? The article says U.S. births alarmingly slide to lowest level since 1979. Failing to exceed replacement rate since before the great financial crisis, which means that people are dying at a faster pace than they are being replaced. If that trend continues at some point in time, and I'll read you a quote that Elon Musk recently made. Basically what he says is civilization basically will cease to exist. But let me share with you the data. It says a new report from the U.S. National Center for Health Statistics shows U.S. births continued a multi-decade slide to levels not seen in more than 4 decades. There were 3.59 million babies born in 2023. That's down 2% from 3.66 million recorded in 2022. This number is the lowest since 1979, where 3.4 million babies were born. It says America's declining total fertility rate peaked at 3.75 births per woman after World War II, and has since collapsed to about 1.617, well below the replacement rate of 2.1. A nation without children is a nation without a future, the article says. The intersection of deaths exceeding births per year appears imminent, and it shows a chart in the article. You probably can't see that, but it's getting very, very close there. So let me share with you what, the article concludes by saying birth rates for most age groups are all declining, except for women ages 35 to 39 and 40 to 44, with the total birth rate well under the level of replacement since 2007. And Elon Musk came out a few weeks ago and says in a post on X, any nation, quote, any nation with a birth rate below replacement will eventually cease to exist. So, how does that get combated? Well, I mean, obviously people have to feel more comfortable and want to, have children in this environment and to bring kids into this world. And look at, I have 2 kids myself, and I guess I could see as a would-be parent sitting back looking at what they see, the what show they see unfolding right now in this world and in this country, and with the state of affairs and the state of the economy and the cost, what it takes to raise a family and to have a baby. I can see why families are reticent or would-be parents are reticent to want to start a family. And I'm not saying that that's a justification for not doing that, but I definitely could see why the trend is heading in the wrong direction. And I personally, as a parent, I do fear, even right now, I fear for what my kids are going to be experiencing in this world when they're my age. And more importantly, how about their kids? So I'm sure that Many of you have had this thought process before, whether you have children or not. Leave your comment down below in terms of, what do you think about that? And where does this, will this trend reverse? I would say that it probably will continue to worsen. The trend will not reverse. You have so many other outside influences trying to break down the family unit now across this country and across most countries in this world, actually. So you also have that. You didn't have that in the 1970s. You had more of a cohesive family unit. You had much, I believe, I haven't looked at the statistics, but the divorce rates are so much higher now than they were back, 4 decades ago. And you have all these outside influences now that are not family supportive, not family positive. We have lost our way from God and from Jesus, and that being an influential part of family life. We have lost our communication with our children. Many families, it's non-existent. The parents and the kids are simply sitting on their tablets and their cell phones at the dinner table at night. I see it all the time in restaurants where families are out having dinner and the mom is on her phone, dad's on his phone, and the kids are on their phone. So we're going to have to start to reverse a whole lot of behaviors, I think, before this is going to translate into a reversal of this birth-death rate. The death rate's going to be what it's going to be. People are living longer, certainly, but you're still seeing those statistics. I'll stop with that topic for today. We're about 17 minutes. I'll be leaving here in a little bit to get a workout, as I do every day. I would urge all of you to do the same. Get your workouts in, get those steps in, move, stay active, and watch the diet. Super important. Do some strength training so you maintain some muscle mass. We're lazy as a people, as a country. We got to, reverse that trend as well. With that being said, have a great afternoon and evening. I should be able to see all of you tomorrow. Bye.